and I have literally just monologued for the last, I don't know, a minute and a half almost, and you guys didn't hear anything. So, well, hello once again, and welcome. Pieter Redlinges is the name. Yeah, I'm going to be taking you through some basic stuff this evening. We are going to be looking at a number of relatively basic things. The idea is really just to build a foundation of you know, what we are going to be working through. Ooh, I see my camera is a bit, where should I sit? Yeah, all right. The idea is really to build a foundation on which we can then build more and more complex content as time goes by. So we're going to be looking at this evening something that is relatively basic but relatively important as well. That is chart construction. So how we build charts and some of the tools that we use as inputs into those charts. So the basic things that we're going to be looking at tonight is the construction of line charts, the construction of bar charts, the construction of candlestick charts, and then the differences between arithmetic and logarithmic scales, as these are actually semi-logarithmic scales. And then I want to spend some time looking at some of your charts as well. So as usual, we are going to play the chart game in the Discord. There is a channel called the chart game, so please pop some of your charts in there and we can have a look at them. I see that the last chart that was uploaded there was on February the 10th, which was Sunday, by Peter. We looked at some charts during the course of the week there as well. Oh man, you've got load shedding at 8, Yaku, that really alright, we'll watch okay, we'll watch the powerful. Thank you very much, Yaku, I appreciate that. So anyway, chart game, please pop some of your charts in. We'll look at them at the end of the stream. We'll go through some of them. Obviously we'd like to see some of your analysis, and then also as we go through stuff, and if you know, picking up on whatever, you can do some of your charts and pop them into the Discord as well. Okay, thank you for letting me know. Obviously these will be available on YouTube afterwards. So if you are affected by load shedding, I'm sorry, but you know, at least you've managed to get the video. Also, what I want to try and do this evening is not go 1,000 hours over. So we're going to move right along to chart construction. So obviously there are different types of charts. The first one we're going to be looking at is line charts. So when looking at a line chart, there are only two variables that are plotted on the chart. One being the price and the other one being time. So the price is on the x-axis or the vertical axis, and time is on the y-axis. So when looking at a line chart, it looks something like, I'm going to just open my training platform. It looks something like this. So we have time over here and we have price over here, right? And these are the only two price, or the only two data points that are plotted on this chart. So basically how this chart works is is calculated or plotted by using the closing price of a security in a specific time frame, and then just plotting that at the different price at the different time points, right? So if the closing price on day 1 is 10 Rand, on day 2 it is 11 Rand, on day 3 it is 12 Rand, those three price points are then plotted over time on the chart, and those are the only two inputs really. And so where these charts are really useful is to obviously identify very long-term trends, and they're very nice to identify patterns. So what happens very often is that we look for all sorts of fancy charting patterns, which is something we'll get to and cover a bit later on, but we look for these fancy charting patterns, and sometimes they look a bit messy, especially because we're all so very used to looking at things like candlestick patterns or candlestick charts and all that type of stuff. So when looking at line charts, it makes them a bit easier and cleaner to spot. You can also use these in any time frame, so you can use daily charts, weekly charts, 15-minute charts. It really is up to you. One of the downfalls is that it can obscure information in longer term time frames, as it cuts out a lot of detail because there's only two data points, right, which is price and time. So to give you some examples of that, here, this is actually one of the charts we were looking at this morning in the sort of online chatty room thing that we've got, and this was pointed out to us as a inverse head and shoulders. Now there's a lot of debate as to whether or not it is a valid inverse head and shoulders, because it should be at the bottom of a downtrend, but nonetheless there is a pattern here that looks like a head and shoulders. Now, to show you a comparison, if you look at a candlestick, you have a very messy situation here where you're trying to interpret what's happening, closing prices all over the place. You've got wicks and tails and stuff. It can be relatively confusing, but if you look at a line chart, it very smoothly draws a very, very nice, easy picture for you to see that you can identify the trading pattern. At this point, I want to open the floor to you guys so that we can see whether or not there are any comments and or questions to look at any examples. I would be happy to do so. But in any case, when looking at, I'm going to continue to use Billiton as the example for now. When looking at these longer term chart patterns, it is very easy to determine what the trend is when looking at a line chart, because it very, very clearly states. And also, if we look at something slightly longer, like for example a 1 week chart, that pattern becomes very, very easy to spot with a line chart, right? So this is, I think, where it is the most useful in two spaces. Looking at determining the trend, I think the first, or the second, or one of these videos looked at essentially the characteristics of a trend, the 3 different phases of a trend, and so on. So determining those individual pieces of a trend, line charts are very good. And then, of course, identifying sort of trading patterns and so on. Identifying ranges, perhaps also very easy with using line charts. For example, here is something called an ABC pattern. I'm going to write it out, and it's just something that I've just kind of spotted right now. There we have I'm going to make that 0 or O. We'll make it a 0 because it's meant to be a 0. So there's 0. We're making that an A, B, and C, right? So that is very easy to see on this, because on the line chart it's just that literal sort of lightning bolt movement. It's very easy to spot. And if you actually have a look, and this is maybe a little bit you know, advanced for now, but an inverse head and shoulders is basically just an ABC pattern and then an ABC pattern the other direction, right? So it's just a mirror image of each other. But in any case, so yeah, it's very easy to spot. Very, very easy to spot the patterns, and very easy to use for long-term trend analysis, right? So we're moving on to the next type of chart, which is a bar chart. Bar chart is also a relatively easy chart to read. Basically, what we have here is most bar charts, some are different to others, but most bar charts have at least 3 variables to them in terms of price. So one variable is always going to be time represented on the bottom axis or the y-axis, right? Another variable is going to be the price variable, and here we have differences where they can, well, there's room for difference. On a line chart, there's 1 point, right? On a bar chart, there's a minimum of 3. Most of the time there's 4, and these are, when it's a minimum, it'll be the high price, the low price of the day, and the closing price. If there is 4, it'll be the opening price, the high price, the low price, and then the closing price. Okay, so these are represented as different price points, or as different points on the actual chart. Obviously, these are used opening calculated using the open, high, low, close of a specific security in a specific time frame, be that 15 minutes. So it'll be then for that 15-minute period, the open, high, low, and close of that 15 minutes, or if it's a daily chart, the open, high, low, close of the day, and so on, whatever the time frame is, right? These are very useful in identifying support and resistance. So if you remember last week, we spoke about the different methods of identifying support and resistance. A lot of them came down to identifying the lows and highs on bar charts, and how those lows and highs interact with each other over a period of days. So if you take, for example, the Gann 2-day method, you first identify what is a potential low candle or a low bar, and then on either side you look at whether the low on either side of that low bar is higher than the lows on the low bar, and then you observe for another 2 days after that, and then you have essentially confirmation that that low bar is in fact a support level and the market could move higher from there. And that, for example, is very easy to see if you're actually looking at the system that was designed around being a bar chart, right? So that makes a lot of sense to then use bar charts to identify significant supports and resistance, or support levels of support and resistance, right? Also, because of the nature of the the bar and the range that the bar shows you, it can help you to interpret the sentiment of the stock market or the market around a particular security, right? It could be useful for pattern analysis, looking at patterns that the types of that the bars form with one another. You know, if you join a bunch of them together. However, candlesticks are obviously much better at that. And then it can be used to present any time frame, again, daily, weekly, 15 minutes, whatever the case is. And once again, I'm saying it can obscure longer term time frames because it cuts out detail. So I want to just explain, and I'm going to start with a line chart, why I say it can obscure longer term time frames. So let's go from a 1 day chart to a 12-month chart. Okay, here we have one price point now represents, and we've got data starting here from 1997. The price point here, every data point represents 1 year. So we can see in this year the market went up, and so far this year the market went up, but that doesn't actually tell us much at all. So if we then look at a 3-month chart, it might take a second to load. It's not necessarily much more indicative. I'm looking at that, is actually not loading. So if we look at a 1-month chart, again, we have every price point here being 1 month, and it looks fancy and we can see the trend, which is fine, but it does cut out a lot of the details. So if you look at a 1-month chart versus, say, for example, a 1-week chart, suddenly there's more detail and more movement in this chart. And then if you look at a 1-day chart, again, even more so, right? So even when looking at, for example, a bar chart, you have a situation where if you use a 12-month bar chart, that's very cool, because now you've got these bars that shows you the open, high, low, and close, but it doesn't give you much else. It gives you the trading range at least, but it doesn't give you, it cuts out way too much of the detail. So if you then, use it on something like a daily chart, that is then a lot more accurate or a lot more helpful in interpreting what the market is trying to tell you, right? So just to look at how these work, I'm going to pause here and ask if there are any questions at this stage. I'm also just going to check the YouTube comments. We'd appreciate a long-term view on Monday. Okay, Lester, please remind me at the end of that, or actually join the Discord, pop it into the chart game. You'll see there's a text channel there called the chart game, and then we have a look at that. So okay, let's look at basically how bar charts work. Every bar chart is represented by a bar. Okay, so here on the time axis, or on the y-axis, every single bar represents 1 unit of time that we are measuring. So if that is a day, which is the case here, or 15 minutes, every bar represents then either 1 day or 15 minutes. So to illustrate, if I go to a 15-minute time frame, every single bar here represents 15 minutes of time that had passed, 15 minutes of trading activity that had passed. If I look at a daily chart, every single bar represents 1 day's worth of trading activity, right? When looking at the what the actual chart or the bar is actually telling us, we have I've got a little template here that I got from the internet, that you can see that the bar represents a number of things. This line, straight up or down, is the range that the security traded in the day. So the high price will be indicated and the low price for the day will be indicated. The little indentation or little, I guess, pippy that it makes on the left hand side here is the opening price, and on the right hand side the indentation or the little thingy that sticks out is the closing price. So when the opening price is higher than the closing price, that means that during the course of the day the market opened at this level. It may have traded up at some point, it may have traded lower below the point where it closed, but it closed here. So the trading range for the day is represented by the bar, or the the bar that is shown, and the opening and closing price is then represented by the two little stukas sticking out on either side of it. The converse applies if the trading if the share price ended up for the day, or security price, be it a share or a currency or whatever the case is. If it opened up for the day, the closing price will be above the opening price, and once again the range will be indicated by the bar. So in this case, though, the color of that bar might change, and these are settings on your own individual trading platform. Some people just use white backgrounds with black bar charts. Regardless of whether or not it's higher or lower on the day, the color of the actual bar won't change. Other people prefer to use red on down, green on up. That is the way that this trading platform is set up, actually. So you'll see here every single bar represents a day, and if we take today, for example, we opened here, there was, if you look very carefully, opened and sort of around the opened at the lows of the day, traded up during the course of the day, and managed to close there. So we have a nice long green bar because we had a very strong day on BHP Billiton today. A couple of days ago we had an open slightly higher, slightly lower, and then or traded up, traded down, and a slightly lower close. So really kind of not much direction on that day. The market tried to go into try to test higher, try to test lower, couldn't really find a direction. And here we have a situation where it opened, traded slightly up, traded sort of punched the low of the day, and then managed to close here. The next day it opened at the same price it closed, bit of a trading range, and you can see how over time this these bar charts indicate to us what the sentiment in the market is here. So for example, to read sentiment here, if we take this day, for example, the market opened and fell like a stone. In the end, they tried to bring it back a little bit, but they couldn't. The next day, it opened a lot lower again, probably fell in the morning. In the afternoon, it fought back and closed here. They got a bit over-enthused the next day by opening it much higher, and it fell like a stone the whole day, and it closed near the lows. So this is very bearish, very bearish. This high open close to end red on the day even is also very bearish, and we can see the next day they pushed it down, buyers stepped in, defended the level. The next day, tried to push it a little higher, couldn't get it. Again, a little bit of sort of perhaps in the afternoon, a bit of excitement, over-enthused in the morning, and they just smashed it down again the next day. So this gives you an idea of what the market is feeling and what the representation or what the trading action was like during the course of the day. So this is a much nicer sort of chart to look at if you're looking at shorter term price movements and doing shorter term analysis on securities. Once again, I'm going to just look for questions. It seems that there are none, so we are going to move on. The next sort of, or the next tool that we can use is a candlestick chart. So a candlestick chart will always have 4 variables in price. Okay, so there's the opening price, the high price, the low price, the closing price, always, and then of course time. Once again, it is usable across every time frame. The same applies. If you use a 1-year candlestick, it's going to show you the open, high, low, close, but it's not going to show you much of actually what happened during the course of the year. At least you'll have the extremes, the high and the low. But if you want obviously more detail, you have to look at the slightly shorter time frames. 1-hour charts, 15-minute charts, or candles. In this case, daily candles are fantastic. 4-hour candles are fantastic. When you start getting to higher than a week, then I say that they might not necessarily have that much value. Weekly candles are still valid, but monthly candles just starts becoming messy. So what I'll do is I'll change this to a candle. I'll change this to a monthly candle, and it's very nice for being able to spot the trend. But there's simply just too much data that we're missing here. Here you can see there's massive high and low movement. The real body of this candle is very small. And you can see that there's been, the market tried to push down and they brought it all the way back up. But I just personally feel that there's too much data missing. I would then prefer to use a 1-week candle to analyze the same period of time, which is over here. And that to me just sort of can just more clearly show really the establishment of a base that we then turned into a trend later on. So be careful of using these on the really long-term time frames, unless you have 400 years worth of market data to look at, which I don't think anybody does. So in any case, a couple of key differences here between the bar charts and the candle charts is one, that the candle charts are a lot easier to identify. Basically what they're giving us is exact same information. They're just prettier to look at, okay? So there are also a number of different patterns that we can look at, and because they're easier and prettier to look at, it's easier to actually see these candlestick patterns, and there's a lot of time and effort being put into understanding these candlestick patterns. I'm not really going to go into too much detail around them because I'll be honest, I don't know all of them. There are just so many. I do have a slide though that shows some of them. We can go through them, and then I'll make that picture available to you guys to download if you like. I'll put it in the Discord. In any case, so looking at a candlestick, there is some terminology, of course, that is important. But starting off with the concept, again, we have this trading range situation where there's a line at the top and bottom. This is, again, the trading range of the security for that period that you're looking at, be it 15 minutes, 1 day, 1 hour, whatever, right? It will indicate the high price, it'll indicate the low price. When the sort of range line sticks out the bottom, okay, let me start here. At the top and the bottom, these are called the shadows of the candle, right? This area here that is solid and has color is called the real body, okay? If the candle has a shadow sticking out the top, that top candle is, or that top shadow is called a wick. So think of a candle, literally a candle, and this is the wick that you set on fire, okay? If the shadow comes out the bottom of the candle, it is called a tail. I don't know why it's not an upside down wick, but hey, I didn't write the rules, okay? So the tail comes out the bottom and the wick comes out the top. Again, we have a high we have the open and closing price being plotted, but instead of it sticking out just on one side, like it does with the bar chart, and the other side to indicate open and close, we now have just a flat line and we color the inside of the candle a different color to indicate where the open and close was. So if the candle opened at the top, and during the course of the day or the course of the time period, the price moved down and closed at the bottom, then we have a red candle, right? On the flip side, if the market opened at the low and pushed up during the course of the day and the closing price is above the opening price, then we have a green candle. All right, so this makes it a lot more easily recognizable when looking at these different things. I'm going to look at any questions. Head and shoulder structure on that chart. Smart Money, please show me the chart. Oh, you're talking about this chart, yeah. So we looked at this on the line chart, was the most easy to spot of them all. In any case, so so this is kind of like how candlesticks work, right? So it's relatively straightforward. Essentially, it's the same information as what is available on the bar charts. It is just more visually appealing to look at. Now, there are a couple of differences. No, I didn't open this thing. There are a couple of differences between different methodologies of looking at candles charts. Give me a second. I updated the database and I never opened the trading platform. Ha 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 ha. That is terrible. Anyway, so there are a couple of different ways of doing this. You can do it on this channel as well. I just wanted to use the other one because I prefer it, but whatever. So there are normal candles and then there are hollow candles. So now you will notice here that the real bodies this time are now not solid as they are with normal candles, but they are hollow. So hollow means open here, rallied up to that point, came off a bit and closed there on the day. But here there is a green candle that is hollow, right? So what does that mean? That green candle that is hollow means basically that the price on the day is up, but the movement on the day is negative. Okay, so the closing price here on the previous day is over here at the bottom. So let's just go through this, okay? I'm going to zoom into that. Ta-da, and isolate this candle, right? So Here we have, we'll start over here. We have the opening price at the top of this candle. During the course of the day, the stock moved all the way down and it closed over here, right? Next day, the price opened slightly higher over here, rallied up almost to the highs of the previous day, and ironically the opening price the previous day. Couldn't quite make it, got pushed all the way back down, sort of to just below or just above the lows of the previous day, bounced off a little bit and closed here. The next day, the price opened a lot higher. Again, tested the open of the 2 days ago situation, couldn't make it, and then got pushed down during the course of the day to below the opening price from yesterday, managed to rally back and closed up. So even though, so now if you look, for example, at a line chart here, if you look at a line chart here, that is one data point to the next is higher. Okay, if you look at a normal candlestick chart, you can see here that this is a down day, right? So the market opened high and closed low, but you've got a red candle. What we have with a hollow candle is it shows green, because if you look at a percentage move at the closing, using just the closing prices, this is actually up. So the stock price moved higher for the day, but the price action is what it shows here was negative, right? Because it is a solid candle. So normally it would be red on a negative day. In this case, it is a red on a day that the market moves lower from previous close to today's close. But in this case, it is a green day, but the candle is now solid, which shows us that it is, yes, it was a positive day, but the price action was negative. So the candle closed lower, even though the price was up. In the case where the candle is hollow, obviously it opened there, closed there, and it made the highs and lows during the course of the day. Now, are there any questions up to this point? I'm just going to check the Discord. I see some charts coming through. Thank you, Yaku. Going to look at Telkom in a little bit. That is beautiful. And let's look at... Alright, okay. Who's looking for more intermediate topics? Sure, rands and cents. We will get there. Don't you worry. We will definitely get there. In any case, okay, so we are going to move on slightly from the candlesticks, looking at some of the different patterns that you have here. I can zoom this in a little bit. As you can see, there are tons of different patterns. If you want a copy of this, please join the Discord. I'll put it in there, or just ask for it and it will, I can send it to you. There's different patterns and different things that you can look at. There are some bullish reversal, bearish reversals, and obviously trend continuation patterns. To go through some of them, an inverse hammer is this pattern over here. I'm actually going to zoom in quite a bit. Whatever, okay. So the inverse hammer, as you can see, is this little pattern here. It looks almost like, it's got a small real body and a very long wick. This is a hammer formation. As you can see, it is the opposite. It has a very small real body and a long tail. And these both are normally at the bottom of a downtrend and show that the market is looking to turn around. In this case, you can see the market tried to rally up during the course of the day, but couldn't quite make it and closed lower. So that shows that maybe buyers are stepping in. In this case of a hammer, which I find a bit more accurate, the market had trended down, sellers sold it down the whole day, and the buyers fought back and managed to close it green. Note that it doesn't necessarily have to be green. That real body can be red, it doesn't matter. It's really the shape which shows the intention of the market. There was a lot of selling pressure, but before the end of the day, the buyers came back and pushed all of the way back. And the longer this tail, the more significant it is, because that shows really that there was a lot of counter pressure coming through, and that is usually a nice reversal signal. On the flip side of that, if you have I'm just trying to find it, you have a star formation. So there's different ones. There's a shooting star, there's an evening star, there's a whole bunch of different things. Different people are going to call it different stuff, but you can see that is basically a hammer formation, just on the opposite end. So that shows that the buyers rallied it up during the course of the day, and then sellers took charge before the end of the day, pushed it down, and it's usually a nice reversal pattern. And there's tons and tons and tons of different ones. I think, you know, instead of spending a lot of time on going through the different pattern types, I'd rather make some material available to you via the Discord that you can go and look and study these different patterns and what their potential meanings are. I'm just going to once again check for the questions. Alrighty. Okay, then we're going to move on to the next sort of topic, which is different types of ways to put scales on your charts, right? So you get different types of price scales. So there are logarithmic price scales and normal arithmetic price scales, and then semi-logarithmic price scales. So to illustrate this to you, all right, it's already open. Yeah. Man, I want to use Metastock because it's the easiest. I just want to see, is this thing not open on a different window here? No. So, what is taking so long? Oh, there we go. Alright, so you get different types of scales, okay? The most common used is the arithmetic scale. So, this is the charting sort of scale that we all know and love, and this is kind of what this situation is here, right? I'm just going to remove all these annotations. Where 1 rand movement is shown on equal sizes on the price scale. Okay, so I'm just going to go through that a bit more. Price units on the vertical axis plots at the same scale or size, right? So the move from 1 rand to 2 rand is the same as the move from 1 rand, from 101 rand to 102 rand. I don't know why this thing is not. I don't know why this thing is not opening. What is the problem? I don't know what's. Just give me a second, guys. I'll edit this out in the end. It is very annoying. I suppose I could take that off. Ta-da! Put that there. Ah, finally. Okay. Is it working? And another copy of the program running. Okay, but there is no other copy. Alright, fine. You know what I'm going to do? I'm going to reboot you. Alright, well, whatever. We are now restarting the Windows PC. Alright, so when looking at the different types of scales that you can use, right? There is the arithmetic scale, which is the most common used for tracking prices. And then there is the semi-logarithmic scale. So I'm going to go through some of the differences between these two. So starting with the arithmetic scale, most commonly this is the one that we use. Okay, so if you look at this, this is a arithmetic scale. Okay, so what happens here is that the movement or the size of the movement indicated on the axis, on the price axis, is equal regardless of where the move takes place. So the movement from 1 rand to 2 rand is the same size as the movement from 101 rand to 102 rand. All right, so think of it as an evenly divided grid. Like if you take a piece of paper and you draw a grid on it, right? You just draw a grid, lots of lines, and those lines are all equally, each increment between those two lines carries the same value, okay? So to illustrate, if you look at the difference between, let's just zoom in here a little bit. So you can see here that on my scale on the right hand side here, every line on this grid is equal to 2 Rand. Okay, and that 2 Rand is the same size everywhere. So here we can see that the share price moved from 280 Rand on this day to 282 Rand to 84, 86, 88, 90, right? And no matter how high or low this price goes, that scale is going to stay exactly the same. And this is fine when we're doing analysis of the chart in the context that we are now, right? So it's pretty easy to see that. All right, it's pretty easy to see what is happening on this chart, right? And we can use this chart to draw all sorts of analysis and do all sorts of things on, because it is easy for us to understand. Okay. Right. So again, the only problem with this is that it loses accuracy when the movements become exponential, or when we're looking at really, really long periods of time. So I'm just quickly going to do that so that I can put the password in. Right. So if we look at something like, I'm going to use Naspers here. Right. If we look at something like Naspers and we look at a really, really long period of time, we can see, okay, on the very left hand side here, I'm just going to focus on this area here. This is, what is that? 200 Rand a share. Okay. So my scale goes from 0 to 250, 250 to 500, 500 to 750, 750 to 1000, 1250, 15, 1750, 2000, 2250, and so on, right? So every sort of block on this grid is, or every increment on this grid is 250 Rand, which is very interesting, okay? Because the movement from 250 to 500 is in fact a 100% price move. Price has doubled, okay? The movement from 500 to 750, however, is not a 100% price move. That would be 500 to 1000. So this is actually only a 50% price move, okay? So a logarithmic scale, or a semi-logarithmic scale, my apologies, attempts to fix this issue, okay? And I don't know if the platform can do that. I'm gonna check if it can. Scales, it can. Where is log scale? Bang. So now what this chart does, or what this scale does, is it, instead of using price as the to scale the increments between the points, okay, it uses percentage move. Come on, you bastard, open up. So on a semi-logarithmic scale, price units on the vertical axis plot basically on the same plots as on a percentage scale. Okay, let's see. I'm sickling in real life, and I've sickled it. I tapped it twice. So the move from 1 Rand to 2 Rand is a 100% move, versus a move from 101 Rand to 102 Rand being like a 1% move, or actually, if you work it out, it's 0.9909 and some change, right? So that movement is not the same. So therefore, that representation on the scale cannot be the same. So Semilog shows these price increments, the vertical distance between the increments on the scale, in terms of percentage, rather than in terms of just absolute Rand value. This is obviously not very common for people to use. It works better over longer term analysis. So when you're doing longer term analysis of instruments, it's a lot more accurate, because you don't necessarily have that distortion of prices. So to show you, this is what Naspers' trend looks like on over the last, since February 2005 to now. It's a lot smoother and a lot more steady as this thing goes from 570 Rand sorry, 57 Rand, all the way up to 3,000 Rand, right? And that movement, as you can see, these blocks are now equal in percentage terms, rather than looking at this price scale on a normal arithmetic scale, and we have this like super exponential move and these wild, crazy swings. Where if you look at that on a semilog scale, it makes it a lot smoother and a lot easier to understand, right? Do we have any questions regarding that at this stage? Let's just have a look. Okay, doesn't look like it. Yeah, see, this thing is still loading. I don't know what's wrong with it. Tisk tisk. Windows Virtual PC, I'm disappointed in you. So yeah, so that's pretty much the different types of timescales that you get, and what the general rule of thumb is for using these semilog scales is if the movement of the security price you're looking at over the period that you're looking at it is bigger than 20%, you'll have a more accurate representation of what is happening if you use a semilog scale or a logarithmic scale or whatever your platform calls it, rather than using a normal absolute arithmetic scale. And the reason is that because you have an opportunity to more accurately draw trend lines, so you see you have a much gentler, sort of smoother ride as this thing, there's a nice trend line versus if you look at that through a normal thing, your trend line might look somewhat different. I'm going to make this one so there, you might, let's say for example, identify that as a trend line. It's tested a whole bunch of times. Here you're petrified because the trend line is now going to break, and you might think that the long-term trend for this stock or the party is over because you have a break of that trend line, but in actual fact, I'm just going to make this one, but this one I'm going to make it blue for you, make it blue. But in actual fact, if you look at the longer term time frame, that trend line in fact did not break, right? It ended up breaking here, which is November 2016. So let's go look at November 2016 on this, which is November 2016 is only here, right? So ironically, that trend line actually breaks at the same point. I don't know, I just noticed that. Look at that. Okay. They're gonna make it orange. What do you know? So we're looking at, okay, that's 2016 December, November, December 2016. And if we change this to a log scale, we're breaking earlier in November. Oh wow, that's pretty interesting. So it does change a little bit, eh? So it changes earlier, it breaks this earlier in November than it does on the normal scale. Ha ha ha! All right, this finally works. So symbol. Let's use a different stock. I don't want to use Naspers. Let's use COH because that was actually something I was looking at earlier. Open chart. Alrighty. So you can see here, for example, this stock lists at 5 Rand. Okay, and then we have this move all the way up to 60 Rand. So that is, in percentage terms, that movement from 5 Rand to 10 Rand versus 10 Rand to 15 Rand, it's not the same. 5 Rand to 10 Rand is doubled. 10 Rand to 20 Rand, it's doubled. So that movement from there to there, it represented should actually be the same size as that movement from there to there, right? But that movement, yeah. So it's it is a little wrong. So if you change this then to a scale, semilog scale, pow, we've got a much smoother kind of ride. So this is more accurate to depict sort of longer term price trends and stuff like that if you're doing long term analysis of trends and that kind of stuff, because it just helps paint a more accurate picture. And you can then measure moves, like if you're into Fibonacci or whatever the case is, then the semi-log scale helps over the much longer time frame. So rule of thumb, if the movement of the security is larger than 20% of the time frame that you're looking at, or if you're looking at like a very long time frame, space of a few years, then try use a semi-log scale rather than a normal scale. The difference in theory shouldn't be all that much unless you're looking at really long time frames. Okay, cool. Then I'm going to look at some of your charts. So we have a chart from Yaku that he's drawn in here. He's drawn in what looks like a flat top triangle, break and a retest. And this is really nice, I have to admit. What is it on? It is on a 1 hour chart on Telcom. So let's look at TKG. TKG. Yes, what a breakout, eh? Look at, even on the daily chart, this thing is looking great. It's great. So I'm going to use Semilog because we're looking at a very long period of time, and it seems as though we have basically cleared a sort of shorter term resistance, but the longer term resistance looms at and or near 80 Rand, which is still a long way up from here. I mean, 10 Rand movement up from here is pretty high. Thanks Crash Driven for the subscription. So that looks pretty good. And if we look at a 1 hour chart, I mean, that is a beautiful break and retest. So I think what Yaku is trying to show us here, and I don't know if he's still online because he said that he had some load shed and some ESCOM woes, is we have a resistance level right about in this area. I remember resistance areas are areas and not necessarily absolute levels, and we have the support sort of line that is coming up here. We're gonna make that, I don't know, let's make it a red. No, let's make it that sexy pink. I love me that sexy pink, man. So we have basically what is like a flat top triangle, which is a trend continuation pattern. We'll get into that at a later stage. And then a break, a retest, and a go. This is a wonderful trade. I don't know if it is too late. I would say that it is still worth buying when it breaks to new highs. Generally, for me, that is like a very bullish sign. I don't mind buying into new highs when there's little resistance, and it looks to me as if there is little resistance up to like $80. Well, let's say, what is this level? 76.40. 76.40, 76.50. It might find resistance, and that's still almost 10% up. So that's not a bad trade, I don't think. But where would you put your stop loss here? And I remember our stop loss methodology would put us here if we're very conservative. But if we want to be a bit more aggressive, we can look at a 1 hour chart. You can say that's a low, the previous low. So our stop loss would be here at 64 with the entry. So we're risking 6 Rand. To make 6 Rand, yeah, 1-to-1 risk reward. I don't know. Maybe if you're not already in this, it might not necessarily be worth chasing. It would have been nice to catch it here. You could probably put your stop loss here, which would bring your risk reward into back into line, but it would also just increase your probability of being stopped out. So I think maybe this is a wonderful trade to have missed, which is kind of sad, but yeah, it happens. Where is my Discord? Okay. All right, guys. Well, that seems to be it for this evening. Nice and short. We, I think, have done approximately 30 minutes, what time? No, maybe 45 or so minutes. Any questions? I'm going to give you guys some time to ask questions. I know tonight's is a little basic, but I think it is an important sort of basis that we have to set, because this chart construction stuff is stuff that people don't know, and hopefully it helps somebody out there. In the meantime, maybe what I can do is just look at some charts. That might be nice. So you know what has been interesting to me, actually? I'm going to show you some stuff here. I saved all the charts, so I don't know if I want to be doing all of them again. So I'm just gonna dig through some of my saved charts. Okay, no, that is okay. Here we go. So some of the things, this is like a trade idea, right, that I've been looking at. This is Firstrand's chart, and what I'm measuring here is the relative strength comparative to what have I done? To the top 40 index. Okay, so I'm looking at how Firstrand is performing against the top 40 index, right? And here I am looking at the relative strength of ABSA. It's actually something that I pointed out. I used Standard Bank rather than ABSA when I did this. When initially, at the beginning of the month, Vince Lane TV stuff. I don't know, random stuff. But here we can see that the relative performance of Firstrand has outpaced the top 40 index for some time, right? And then recently now, as shown here, we are starting to see Firstrand underperform the overall index, and this has been since sort of the beginning of this month, end of last month, beginning of this month. It really sort of started dipping, and this came out also in analysis that we'd done, or that I'd done earlier in January, where at that time Firstrand had sort of started giving signals that it might start underperforming, right? And here we see ABSA Group, which since sort of October last year had started outperforming the top 40 index. So what we have here now is we have a index that is relatively outperforming the top 40. The financials have been doing really well, and we've now managed to identify one of the stronger performers in the index and one of the weaker performers in the index, right? So that kind of puts us in a space where we know if we're looking for longs in, if we believe that financials are going to run really hard, we now have some stock that we can back, which is ABSA, and if we think that financials are going to come off, we have a stock that we can short, which is Firstrand. There are other options as well, but these are some of the main ones. So then here, I looked at the relative strength between these two, and they have a sort of historic relationship that the ABSA share price is usually around 3 times that of the Firstrand share price. Okay, and since sort of last year, or in 2017, this relationship started changing a little bit. Okay, so the relationship between ABSA and Firstrand, ABSA was going through a whole bunch of stuff. I mean, Barclays wanted to sell them and all sorts of things. It was very bad press for ABSA at the time, and ABSA started relatively performing weaker than Firstrand in general. It tried to recover, but it there was even a sharp sort of rally for it, probably on some news event, who knows, and then just in general that trend started just really sinking in, and it underperformed Firstrand for some time. Now, as indicated by my nice fancy moving average here, the relationship between those two stocks have started to trend in the other direction, right? So if we get a correction into the historic sort of range that this relationship is, which is, you know, around 3 times ABSA over Firstrand, then we're going to come into this target area at first, and then probably overextend it and go back up to this 3.2 kind of level, 3.2, 3.1 in that area wouldn't be too surprising. So it's interesting then to see this, you know, how this relationship between these two stocks are going. And then if you look at the way that they perform today, you look at something like Firstrand that ended the day down 80 basis points, and you look at ABSA Group, which ended the day up 3%. I mean, that's a beautiful pair trade, right? So the theory here is basically just banking on that historic relationship coming back in line to what it once was. So that was quite an interesting little trade idea. I don't know if you guys are into that sort of stuff. And if you look at the the sort of standalone charts for these stocks as well, or not a weekly, don't give me weekly, give me daily. We've got quite a nice little support level here, a little short-term trend that broke, bang, and we're off. It looks like we might be approaching resistance here around this 188 level. We're sort of in that resistance zone now, really. So if we can get up clear through 188, then I think we're probably looking at testing these highs again. And if you squint your eyes real nice boy, you could potentially call that some sort of a, you know, reversal pattern. I don't know. To me, it doesn't actually look like one. Yeah, you got to squint your eyes real hard. I don't know if I am so convinced by that. But in general, like, you know, if we just look at a trend changing scenario, we have a downtrend that was tested a few times, broke, retested. This sort of area that you sort of test that trend line a whole bunch of times before forming a base and reversing is a nice trend reversal on ABSA. So I would be relatively bullish ABSA in the face of a strengthening rand, which is insane, and I would be relatively bearish on Firstrand in the face of a strengthening rand, which makes a bit more sense because here we have a pretty solid resistance level. I always do that. A pretty solid resistance level, and potentially just sort of a channel that it's trading in, right? So it's, for me, a potential move down back to the bottom of this channel versus the ABSA setup, which looks a lot better. So for me, it's a bit of a safe, it's a kind of like a safe bet at this stage to be long one, short the other. I don't know, I'd love to hear your comments. Agree, disagree, tell me I'm a fool, tell me I'm a genius, I don't know, whatever. I'd love to hear it. I would love to hear it. And that, I think, is all, because I see that there aren't very many questions. So I hope you enjoyed. Please leave comments, like videos, let me know what you think. Yeah, come back next week. We're going to be covering some more stuff. I want to kind of work through really the very basics of technical analysis in the beginning, and then we'll move on to to a new topic, you know, more trading strategy kind of stuff, and then we'll go into more advanced technical analysis, and so slowly build up onto more and more sort of complex and complicated stuff. We just have to make sure that we have the basics. So please be patient, guys. For those who did say that they were looking for more intermediate types of content, we have to just lay a foundation first, and then we'll get into the intermediate stuff. And later, I promise you, we can get into like the really, really complex stuff. I want to look at stuff like market breadth. I want to look at stuff like you know, the actual mathematics behind how indicators work. We first just have to make sure that we understand how to walk before we can fly. But anyway, that is it for this week. I hope you've enjoyed. I hope you have a good evening. Leave comments, join Discords, let us know what you want to learn, and I'll see you next week.